record this. All right, so today we are going to be talking about the exciting topic of income withholding orders. So I'm going to kind of use garnishment, IWOs, income withholding orders, all interchangeably to discuss this. We're going to talk about involuntary deductions, new hire reporting, priority of garnishments, and then go into the different garnishment types, tax levies, child support orders, creditor, bankruptcy, student loan, and federal agency debt garnishments. We'll talk through some examples on how to calculate these, which ones are dictated federally and which ones by the state, and we'll make sure that we cover some of the Colorado specific legislation that affects garnishment. So it's something that I'm sure as a payroll department, or maybe the payroll department, we've all encountered some kind of income withholding order for an employee, and it's just good to review some of the new legislation and the old legislation around how these should be applied to payroll and what the employee needs to know about them, as well as making you the expert on them. So what is an involuntary deduction? It is any deduction that requires the control to be out of the employee or the employer's hands, right? So we mean that the deduction is neither an employee or an employer control. The employer is required by law to deduct and remit. By remit, I mean send to a person or government agency to satisfy an employee debt, and the failure to do so, the failure to deduct and remit wages for an order will generally subject the employer to liability and penalty equal to the amount required to be deducted. I'm going to say that a lot in this presentation because even though it's an individual person's debt and responsibility, once a garnishment has been issued, it now becomes the employer's responsibility to make sure that wages are being withheld and being paid to the agency in a timely manner. And usually that time is dictated in the writ of garnishment itself. So like I was saying, the payroll department staff may be required to make these deductions from the employee pay for a child support, a medical support order, unpaid taxes, or any court order that's out there to repay a debt. Garnishment is a legal proceeding authorized by an involuntary transfer of an employee's wages to satisfy a debt or obligation. I know I'm being a little bit repetitive here, but I just want to make sure I'm tackling this topic from all angles. Any questions so far? Has everybody seen an income withholding order at least once in their career? I'm not seeing a lot of traction on chat, but thank you, Melissa. Several, yes. Daily, wow. Okay. So how does somebody know to issue a garnishment to an employer? Well, at the beginning of an employee's employment with a new company, there is new hire reporting that is required. It falls typically to the payroll or HR department to complete new hire reporting for every new employee. If you don't know how this is being taken care of in your organization, I would recommend looking into it. We'll talk about it several times, but again, that liability does fall onto the employer. If you are not doing new hire reporting and there's a garnishment out there that you didn't notify the agency that you have this person now working for you, even if you were never issued the garnishment, just knowing that it's out there and you didn't do your new hire reporting correctly, you become liable from the day that they start working with you or for you, that for all of the outstanding debt and all of the arrears to take care of that on behalf of the employee. So really important. I included the link here to the portal. You do need to establish login credentials if you haven't done so. And you just log in and you report the employee's name, address, social security number. Make sure that you're also putting in the correct FEIN for the employer. In the state of Colorado, the date of birth is also required. I know internally for us, we're taking a look at the W-4 and the I-9 because the I-9 has the birth date, and that's how we're collecting all of this data to make sure we can report our new hires. Priority. So It's kind of convoluted what the priorities of garnishments can be. What I mean by priority is the order in which they are applied to an employee's wages, which garnishment has a determined priority. Is a little bit like rock, paper, scissors. You've got a tax levy, which beats a child support if it's received first, but a bankruptcy, which always beats a tax levy and never beats a child support. So that's why I included this chart here for your reference. You can really see what type of garnishment trumps another type. Some chronology, so when that withholding support or withholding order is received takes effect, but a lot of the time it just depends on what type of garnishment it is. So a federal tax levy is always going to trump a state tax levy, even if the state tax levy was received first. And again, state will also trump local tax levies in that same way. A federal tax levy will bump in front of any creditor garnishment or student loan garnishment, but it is never going to bump in front of a child support order. Bankruptcy, we'll talk about this a little bit later, that tends to trump everything no matter when it's received, and except for the child support order. So it's really good to have this chart to refer to so that you can look back and see what needs to move around if you receive more than one garnishment to be applied to an employee at a time. Okay, so knowing what we know so far, we're going to do a pop quiz. Remember, I need to record everybody's engagement so that they can earn their RCH certificate for the meeting that we're having here. So an employee's disposable pay is $750 with involuntary deductions received in the following order. First, a federal tax levy at $175, then a $125 property tax levy, $75 state tax levy was received after that, and then a $50 creditor garnishment. So the question is, which involuntary deduction has priority? If you would please type your answer into the chat with your name. That way we can keep a record of everybody's participation for the RCH credit. Great, seeing those come through, thank you. And it looks like everybody is correct. It is a federal tax levy. The CPP exam does like to throw extra information at you. So it included all of the amounts of the levies, which really make no difference when answering this question. And the federal tax levy takes priority over all garnishments except child support orders. And it was received first, so it would take priority for several reasons in this case. All right, the first garnishment type that we're going to dive into is tax levies. What you're seeing on your screen is an example of a federal tax levy. I want to point out that it will include a total amount due. And so it might be your procedure to record that amount in your software or just to keep track of it and see what the employee is paying off and how close they're getting to that total due to the IRS. However, even while the employee is making payments on this garnishment, they're continuing to accrue interest. So you, on these tax levies, you don't want to just stop paying them, stop withholding and remitting the wages until that amount due issued is paid off. You have to withhold until you receive a notice, a written notice from that same agency that says that the garnishment is now fulfilled, it's canceled, you can stop taking it. Because we really don't know where those interest charges are going to land in 6 months, in a year and a half, when the levy is nearing its end. So employees who fail to pay their taxes on time become subject to a federal, state, or even a local tax levy after other collection efforts have been exhausted. So what the employer must do and what the payroll department must do is determine the amount that is subject to the tax levy. Tax levies use take-home pay, which is unique to garnishments. Most every other garnishment is based off of disposable income. So we'll talk about the difference about that later. Whether there are any other claims to the employee's wages already. So we talked about determining the priority in which this tax levy is going to be applied to the employee's wages. So there are some exemptions from tax levies. All payments made to employees are subject to levies unless specifically exempt under the IRC or IRS regulations. Amounts paid to the employee. Okay, sorry. Federal tax agencies are not governed by exemptions rules that apply to other garnishments or child support orders under the Consumer Credit Protection Act. I said that slowly because the CCPA really sets a lot of rules and protections for the employee and the minimum amounts that they can take home for each type of garnishment. So you'll hear me refer to the CCPA Consumer Credit Protection Act several times. The list of the payments that are exempt from a federal tax levy are unemployment compensation benefits, workers' compensation benefits, annuity and pension payment under Railroad Tax Act, or certain armed force personnel, certain armed service connected disability payments, certain public assistance payments, welfare and supplemental social security benefits, amounts ordered withheld under the previously issued court order for like a child support. So I didn't just know that list. I looked it up in the payroll source, which is a resource that the APA provides to any national members. They've got a lot of good information in there that you can refer back to if you have questions. Really, I don't pay attention necessarily to the answers until I have to ask the question. So when you encounter a tax levy, I would encourage you to jump on the APA website and look at the payroll source and make sure that you have the priority and the exemptions all squared away. Okay, what is take-home pay? It is it's not just the involuntary deductions that an employee already has, such as taxes, but it's also voluntary taxes that affect the net pay for an employee. So it is anything that remains after all deductions that were essentially in place when the garnishment was received. So federal, state, local taxes, involuntary and voluntary deductions set in effect. So if the employee was already contributing to a 401k plan, had medical benefit deductions set up, all of those affect the employee's take-home pay and the amount that can be garnished for a tax levy. Any increases to those pre-existing deductions are also considered take-home pay and are not eligible for the tax levy. And then if after you receive the levy, if there then becomes an additional involuntary deduction such as a union due, all of those can be applied to affect the take-home wages. Once you know what the take-home wages are for the employee, then you have to refer to the federal exemption table for the amount to remit. This is what that table looks like. It's structured based on the W-4, how the employee files their W-4 information. So you would look at the frequency in which they're paid and the type, their status, their filing status, and then the number of dependents. You would follow the row across and the column down to know exactly what that exemption is for the tax levy, and then can calculate what the amount to remit actually is. So if you're like me, I work off of examples, so I put one together for us. An employee receives $2,600 every 2 weeks from his employer. On August 1st, the employer received a 668W, so that is the official name of the form for a tax levy, stating that a federal tax levy is being issued against Arthur's wages for the total amount of $25,000. The employee claimed married, filing jointly with 3 dependents. That's going to be important when we're looking at that federal table. And as of August 1st, the deductions that were already on his wages are as follows. So we're first going to calculate the take-home pay. And that is all of his voluntary and involuntary deductions. So if you add up all of his federal, state, Social Security, and Medicare taxes, in addition to his 401k plan contribution and his health insurance contribution, that amount is $560.46. We're going to subtract that from his gross pay, the $2,600. So his take-home pay is $2,039.54. The next step is to find out what his federal exemption is from that table. So if we take a look at what he's married filing jointly. So that's the section I snapshotted here, and he is paid bi-weekly with 3 dependents. So I'm following the bi-weekly row across and the 3 dependents column down for the amount of $1,461.52. So to find the amount that is subject to the levy, we subtract the federal exemption from that table from his take-home wages. And the total amount to pay for this tax levy is $578.02. Does that make sense? I hope. Okay, great. Thank you. So the last thing I want to talk about from tax levies is, again, when do you stop withholding? The employer must continue to withhold and make the levy payments until a release of levy. This means the employer may not stop withholding when the payments match the total due from the IRS statement on the 668-W. Withholding must continue because of the interest and any additional penalties that may have accumulated while this levy was in place. You're going to remit, so you're going to send a paper check in. You can combine multiple employees onto a single paper check if they're all going to the same place. So, right, if it's a federal tax levy, you have 5 employees who have tax levies at the federal level, you can combine them into one paper check, but you must send with that check all of the employees' names, their Social Security numbers, the payment amount for each employee, and then a contact number for the employer. If you don't give that detail, then they don't know who to apply what amount to. So it's important that you send all of that detail if you're combining them into a single check. And you can send that single check for as many as 200 employees who are paying a tax levy to the same agency. If there's more than 200 employees with federal tax agencies within your employment, then you would have to break that up. I know I keep saying this, but again, the penalty for not paying falls on the employer. So if you are not applying wages and calculating them correctly and remitting them on time, then you're making your employer liable for all of the amount that should have been paid while that individual was an employee. And any penalties that are accrued, any late fees, any interest that have accrue while that employee is working for this employer. So it's really important to make sure you're getting those right and getting them done. Any questions on tax levies before I move on? Okay. The next one I want to cover is child support. So this, what you're seeing on the screen, is just one page of a support order. You'll have additional instructions on where to address and remit payments on a second page. Typically, all orders should be mailed to, or will be mailed to, the employer with both an employer and an employee copy. So you as the employer can give the employee a copy. They have the right to see what is being garnished from them. So it's important that you give that copy to the employee. We'll take a little bit more close look at this. So while if you're looking at the details, this is a California support order. Colorado looks very similar. Child support order forms have become pretty standardized recently, which is great. It makes it easier to read and apply those no matter what state they're being issued from. So it's going to give you not only the employee information, so you know exactly who to put the order on, but also the amount per month that is due. Not only is it going to tell you the amount per month, but it's going to break it down by pay period. So all you have to do is look at what your frequency is. So if you pay biweekly, then the amount due is $92.30 for John Doe. If the employee happens to be in arrears on their child support order, it will affect the maximum percent that can be withheld. And we'll talk about those percentages a little bit later, but it is very clear on this support order what the maximum percent is and whether or not the employee is in arrears or not. Okay, so the maximum amount that can be withheld from an employee's for wages for this child support order is 50% if the employee is supporting another spouse or dependent, so they're claiming those on their W-4 on their taxes. And if they are not claiming another spouse or another dependent, then their max is actually 60%. Those can increase by 5% each if the employee is in arrears. The income withholding order is issued by the state enforcement agency, and that is who is going to be typing in the specifics on the withholding order. Just so you know, states must review and make adjustments to child support orders at least every 3 years. So you should be, if you have an employee who has a child support order and they're still within your employment after 3 years, you should be expecting to see an updated order coming through. It might be for the same amount. Those amounts might have adjusted, but just know that you should expect those after 3 years. So pop quiz. An employee who is not supporting another family has a semi-monthly disposable earnings of $1,200 and is more than 12 weeks in arrears on a child support payment. Please calculate the maximum amount per pay that can be deducted from the employee's pay. So let me keep that in mind, the $1,200 and is more than 12 weeks in arrears and is not withholding or is not supporting another family. So if I bump you back to our cheat sheet, if you would do the calculation, and please put that in chat. See those numbers roll in. Thank you all for participating. And everyone I have seen correct answers from. So we are taking that $1,200 and we're multiplying it by 65%. 60% because he is not supporting another family, and the extra 5% because he is in arrears. I'm sorry I say he, that's just an example. Quickly, let's go over calculating disposable earnings. What you need to know is it is the gross wages with only the deductions required by law, right? So it is typically just your taxes. This is different from take-home pay. Voluntary deductions do not play into disposable earnings. So what you would do with a child support order is calculate the disposable earnings and then find what the maximum that you can remit. So it's either the amount on the order or the maximum that can be deducted, which is again that 50, 55, 60, or 65%. If a medical support order comes through, then you're also liable to offer that. That's matching it's a little more complicated, but it's offering the same benefits, the medical insurance to the employee and their child. If you do plan on taking your CPP, this is for our study material, we always like to give test tips. This test tip is calculating disposable earnings appears several times on the exam. So if you plan on taking your CPP or FPC certification exam, make sure you're very familiar with calculating disposable earnings. We're going to practice this. So on this chart, we see the gross earnings for this employee, which is $1,950. And we're going to take a look at all of the deductions that would be applied to this employee. And you see the net pay is $1,481.97, but that includes deductions for 401k and a medical benefit. While that would be the same as their take-home pay, for a tax levy, it is not what we use for disposable pay and what are eligible wages for a child support order garnishment. We do not include the 401k deduction or the medical benefit in that. So we're just using the deductions required by law, which are the state taxes. Okay. Let's talk through this now. What if you do not have enough money in an employee's wages to pay the full amount of the order? So Gary receives a child support order demanding $700 of Gary's disposable earnings, to be withheld and paid bi-weekly. The state where Gary lives and works follows the federal law in determining disposable earnings and the maximum that may be withheld for a child support. Gary is not late in paying his support order and is not supporting another wife or child. That tells me right off the bat that that means he's going to be, or the max that can be withheld from his wages is 60%. Gary's disposable earnings and the amount withheld for child support are determined as follows. So again, we see the calculation for disposable earnings. It is not affected by the health insurance, the 401k, or his United Way contribution. It's just those required by law deductions. So his disposable earnings are $1,133.42. We would check that against the 60% to see what is the max that can be withheld from Gary's check, and it is actually $680.05, which is lower than the $700. So that's the amount that you would pay for the child support order instead of the full $700. So the remaining of that is going to go into arrears, that $19.95, and you'll see what his final net pay is. His total deductions, right, with all of his voluntary deductions included, minus the child support order. So his take home is $313.59. That's unfortunate for Gary. Okay. If an employer receives more than one child support order, withholding order for an employee, state law governs how that order must be handled. The employee is obligated to continue withholding according to a valid withholding order unless it receives notification in writing from the agency or the court issuing the order of any changes. So keep withholding until you see in writing that something has changed. If you receive 2 child support orders, there are a couple of different ways that you can handle it. And again, it is dictated by state which one you would use. You can use a prorated method, and that is the way that Colorado enforces its withholdings for this for child support garnishments. The other option is to allocate equally, and I have an example on the next slide that will walk you through the math on how those differ from one another. If the employee has any concerns or wants to argue a withholding order, it is the responsibility of the employer to continue withholding at the amount that is received on the income withholding order and send the employer or the employee to the state to argue for a different amount. And if he wins or she wins the case, you will receive a new withholding order to update the employee's wages, but you don't want to make any changes until you have that in writing. So what is the prorated method? It is allocating the available wages to each order, depending on the percentage in relation to the total amount required. What that looks like is if you have an employee who's receiving two different child supports, one in the amount of $450 and the next one in the amount of $300, you would first take a look at what is the maximum amount that can be withheld. So in this case, George's pay, the maximum amount that can be withheld from his disposable earnings is $600. It says that in the example, if you read through that paragraph. So what we need to then calculate is what percentage, so if you add the two child support orders together, it's $750. That's more than what can legally be garnished from this employee's wages. So we need to find the prorated method of how to allocate and pay these child supports. So like I said, 450 and 300 added together is a total of $750 to be garnished for these two different child supports. The first thing we're going to do is find the percentage of the first order. So $450 divided by 750 lets you find the percentage of 60. And 60% times the 600, which is the maximum amount that can be withheld, is $360. So instead of sending the full $450 for the first garnishment, you would send $360. It's pretty simple math here, but we'll go ahead and continue with the example. Finding what the second order percentage is, you can do $300, which is the amount of the second withholding order, divided by 750, which is the amount of both orders added together, and that gets you 40%. Obviously, there's more than one way to find that, but that's how we did it here. So $600, which is again is the max that can be withheld, times 40% is $240. So that's what you're sending to the second child support order. Again, this is the way that we are supposed to pay child support orders or multiple child support orders for an employee in the state of Colorado. The other way of doing it is a little bit simpler. You just divide them equally. So if $600 is the max that can be withheld, you would divide it in two and send $300 to the first child support order and $300 to the second child support order. Okay, really briefly, because this is taking a while, sorry about that. If you have a federal tax levy that's in place before the child support order, then you would start looking at the percentages that can be withheld. This example assumes that take-home pay and disposable earnings are the same. So what that means is this Ralph employee does not have any voluntary deductions, right? Because that's the difference between take-home and disposable earnings. He is not supporting another spouse or family other than those mentioned in the child support order and is not more than 12 weeks in arrears. So that means the max that can be withheld from him is 60% for a child support order. 45% is supposed to go to the tax levy as ordered in the tax levy, and that means there's an only remaining 15% to send to a child support order. You still have to pay attention to what the max amount or the minimum take-home pay is of the employee. I'm not going to read through this word for word, but you can after we send them out later. So, pop quiz, a national medical support order notice requires an employer to, and we haven't covered this yet. So I left this in here simply so that we could talk about it really briefly. If a national medical support order notice requires an employer to honor the qualified medical child support order, that means that all states have passed laws allowing courts to require a medical child support order as part of a regular child support garnishment. All employer-sponsored group health plans are required to comply with state laws regulating medical child support and to honor qualified medical child support orders. So if you're providing benefits to the employee, those have to essentially trickle down to the employee or the child on the child support order. All right, any questions on child support before we move on to creditor garnishments?
Man, and you're doing awesome. Thank you.
Melissa. All right, so a creditor garnishment is a wage garnishment as a legal means by a person who is owed money, or a creditor or obligee who has not been receiving payments. It's another way for them to obtain payments from that individual. So a limit that can be placed on creditor garnishment is 25% of disposable earnings. So you're not going to see take-home earnings calculations anywhere but tax levies. We're just moving forward with disposable earnings for the rest of these garnishments. So you can either send 25% of these employees' disposable wages, or the amount by which the employee's weekly disposable earning exceeds 30 times the federal minimum hourly wage. The APA, the government, they all provide this nice little table for you, so you don't even have to do the calculation for that 30 times the federal minimum hourly wage. You can just make sure that you're comparing it to this chart and that the employee is taking home at least the minimum. Disposable earnings are calculated again in the same way for a child support order. Is there anything else? So generally, public sector employees' wages are exempt from creditor garnishments unless specifically provided otherwise by the state. And I think if the maximum of this is important, if the maximum is already being withheld when a second garnishment is received, nothing may be withheld for the second garnishment. So you really have to stick and pay close attention to what the minimum take home is for your employees. Again, it is the employer's responsibility to make sure that a claim is valid, to make sure the employee understands the garnishment and knows how it is going to affect their wages, and then to determine the amount that is required for the minimum take home, and pay attention to the priority in which it's going to be applied to wages if there are multiple garnishments for a single employee. If you have any questions, contact a legal counsel or the agency issuing the withholding order. That's the best way to go about it, instead of going directly to an employee or making a best guess. So we're going to talk through a quick example. Michelle's disposable earnings for a week are $250. When her employer receives a garnishment order requiring that $300 be withheld, the maximum amount of Michelle's disposable earnings can be garnished is determined as followed: either 25% of $250, which equals $6,250, or we can refer to the table from the last slide, which is the 30 times the weekly or the federal minimum wage for a weekly take home. And on the, excuse me, on that chart, it says that $250 is the max. So we would do 250 times the minus the 217.50. And so that amount is actually 32.50. 32.50 is obviously smaller than 62.50. So that means we're following that rule of the 30 times the federal minimum wage. So the max that can be withheld for this garnishment is actually 32.50. Okay, just pausing to let that sink in. I know I threw a lot out at you here. Just checking the time. We'll go through this example, but might skip the next one. So Ralph's disposable earnings, so then gross pay minus any deductions determined by law, are for a biweekly pay period is $1,000. When his employer receives a child support order, and that is in the amount of $400 to be withheld each paycheck. After withholding $400, Ralph's disposable earnings remain at $1,000 under the CCPA. But if Ralph's employer receives a garnishment in the order of $500, while the child support withholding order is still in effect, nothing may be withheld for that garnishment because 40% of Ralph's disposable earnings are already being withheld. So it's again just paying attention to what is the minimum that an employee can take home and what is the maximum that can be withheld. In the second example here, it changes the child support order to $200, which is reducing it to 20% of an employee's take home, or sorry, disposable wages. So if that leaves 5% that can be garnished, because the creditor garnishment max is 25%. So if 20 is already being withheld, an additional 5% can be applied to satisfy the creditor garnishment. So that's how you would do the calculation for multiple garnishments in this case. I just have a few more short ones to run through. So bankruptcy, traditionally a bankruptcy is going to trump all other garnishments except a child support, because the bankruptcy, if somebody's filed for bankruptcy, then an agency has come in and combined all of the employee's debt into one amount. So you would cancel all of the other garnishments that are applied to the employee's wages except child support, and just do the bankruptcy garnishment, because when you remit the wages to that bankruptcy agency, that trust, they're going to then disperse the payments accordingly to all of the different agencies. So if he had a tax levy, a state tax levy, and a creditor garnishment, all of those could be combined into one, and you only have to withhold the bankruptcy garnishment. Again, this is based on disposable earnings, not take home, and the max that can be withheld is either 25% of the employee's disposable earnings, or again, that 30 times the federal minimum wage. Okay, student loans is going to be very similar, except instead of 25%, the max you can garnish is 15% of the employee's disposable wages. Or again, that 30 times the federal minimum wage. With a student loan garnishment, there is some notifications that you have to provide the employee. So after you receive the order, you give the employee a 30-day notice before you apply it to payroll. Always child support orders take priority. Employers do not have to change their pay period. So with a student loan garnishment, they might require, or it might say in the instructions, send this amount every week. But if you're a biweekly payroll, you don't have to change your frequency to comply with that. Just good to know. Again, the liability of all garnishments fall onto the employer. So if it is not added to an employee's wages or not added correctly, the employer is liable for all of the amount. Another side note, student loan garnishments were suspended due to COVID through May 1st of 2022. That's right around the corner. So if you have any employees who had a student loan garnishment that was suspended, they're going to start applying to their wages again in mere days. So you might want to take a look at that. The last garnishment I'm going to talk about today is any federal agency debt garnishment. It's just like the student loan. The max that can be withheld is either 50% or 30 times the minimum hourly wage. And oh, Robbie says it was just extended. Okay, thank you. I'll have to look into that. Oh, and Jenny said that she saw it too. Thank you. APA did not have their notice update, so I'll have to go and look into that. Thank you both. Okay, so unless otherwise provided, federal agencies' wage garnishments have priority over other types of withholding orders except child support. And if an employee's pay is already subject to another type of withholding, you have to pay attention to make sure that you're not going above any of the max amounts that can be withheld by looking at the combined instructions of those garnishments. So that was a lot of talking. It's just right on time. Does anybody have any questions that I may or may not be able to answer?
I just say, Manon, you've been in payroll for such a short time and you did a great job. How many years have you been in payroll?
3.
3. Look at you. You're a rock star.
It's honestly been really helpful to be a part of the study groups. I feel like that's really helped me absorb a lot of the foundation that I've needed.
Yeah, you've done great.
Thank you. All right. If there aren't any questions, then we'll go ahead and end it there. Thank you all for coming, and we'll try to get the RCH credits out to everybody tomorrow. So be watching for that in your email.
Thank you, Manon. You're amazing.
Thank you all.
Bye.
Bye.